Hey traders, welcome to Charts and Coffee. Happy Thursday, everyone. Hope everyone is doing well. We're looking at a trading session the day after the FOMC. The meeting minutes that we had yesterday seem to have at least, remember gang, we're not necessarily concerned that the Federal Reserve is going to hike more. We're not necessarily expecting that they're going to be cutting a whole heck of a lot less. What we need to continue to do is monitor where the target rate is leveling off. This is definitely what we want to remember in terms of a focus on the what expectations being fully discounted or baked into the cake. So we don't want to front run anything. I hear a lot of analysis, see a lot of folks talk about what the Fed's going to do. We don't want to get in the habit of front running macroeconomics. It's a bad idea. It's low percentage. Sounds fancy. It sounds like we know what's going to happen, but it's actually very low probability. Why would we have to front run when we can actually see what is being expected? Now we can bounce expectations off the broader psychology. So get in the habit of, number one, stopping the prediction, stopping the fortune telling type analysis, which has nothing to do with trading, and focusing on what does this mean to the broader market? Here's the important part, compared to what they were expecting. And that's continuing to be the way in which this market is, quite frankly, fairly predictably responding to either 3.25 to 3.5%, or 3.5 to 3.75% target rate probability. Now that might sound like gobbledygook until you realize that's where traders and investors think the Federal Reserve is going to stop. And as long as data doesn't change that too greatly, that is something we can hang our hat on. That is something that is useful. And we want to remember that's the measuring stick. And if there is fear or optimism in the marketplace, it's going to be based on where we are in expectations of those two columns, those two target rate probability scenarios, right? That's macroeconomics, gang. It's just not that hard. But the funny thing is, 24-hour cable has to talk about something, so that it's going to make things more complicated and more ridiculous. And, so that's it. That's macroeconomics right there. You can be a English major, psychology major with no economics background and decipher this. You do not have to be a PhD in economics to do this. Not that there's anything wrong with that, but you don't have to be. All right, gang. As always, this show is about your questions, and it's also about seemingly getting my charts to fit on the screen the way that I want them to for our show. There we go. All right, so let's get into the very first question, and that is Martha asks, when on the go, is there any chart setting I put on my phone in case I need to manage my trade? So it's not a chart setting so much, Martha. As far as managing a trade, the thing to remember is that I don't want to make any major decisions, and I want to have a view that allows me to see my indicators, my secret squiggles on the phone, what have you. So I like TradingView. I'll just use my TradingView setup on my TradingView app. All right. So then any settings to put an alert. So again, if I'm using TradingView, I can place an alerts on anything, but you're talking about HPMRs. Look, a lot of folks are asking, Rog, can we put alerts on HPMRs? And let me put this in another light. When you're day trading, it is exceedingly difficult to manage. And I've been doing this a minute. Cat, I'm in the middle of the show, buddy. All right, give me 1 sec. Cat wants out. All right, come on, dude. You animals are very needy this morning. All right. I had the dog here in the office. There we go. I had the dog here in the office, munched away at a toy. I guess the weather's kind of lousy. They like to hide out here in the office. I don't know. Maybe all the monitors give them comfort. I know they give me comfort. All right. So when you're day trading, I think anything more than about 4 to 6 symbols uh, being watched starts to become pretty unrealistic in terms of catching a trade in a way that's still actionable. Alerts on day trading, as long as you're not exceeding that 4 to 6 symbol sort of, I won't say it's a threshold for everybody, but it is for a lot of folks. I don't look at more than about 4 to 6. When we start looking at more, one of the things that happens is we start looking at lower quality setups. So the 4 to 6 that we're going to watch should be the ones that either we're the most comfortable with, generally speaking, or that have the best structure. So can you put alerts on there? Sure, but do I use alerts for day trading? Not really, Martha. I'd rather just keep the symbols that I am most focused on regularly, or that I feel I have an edge in based on what I taught in the day trading class. Doing that daily time frame homework, seeing whether or not the HPMRs are scrambled, right? Are they overlapping? Are they crisscrossing? What's the structure of the underlying market? Am I neutral? Am I bullish? Am I bearish? I'm making those determinations far before 9:30. I think a lot of folks start day trading in terms of preparation at 9:30. Really, we want to start that day trading preparation at least 30 to 60 minutes before, depending on your experience with your process. And then remember, gang, the HPMRs that you all have, Lorna Bot built in the alerts into it. So you can turn an alert on if you'd like, right? So the option is there. I get it. But that optionality is there. All right, next up, Brian, could I show how to calculate and use the line of the sand? I will in the room, Brian. I'm not going to do that here in Charts and Coffee, a little too involved. If you guys are looking for specifics about different techniques and so forth, it's a little bit outside the 20 minutes we have here. But if whatever room you're in, Brian, hit me up there and I'll be more than happy to. But just to define what the line of the sand is, for those of you that are wondering what Brian is asking about, it is a sentiment line that I draw. And there's usually 3 different ones that I'll look at to get an idea of whether or not we are most likely to move higher or lower, at least for the morning. Not that it's a buy signal, but that it gives us a probability. So we're not two-way trading, which I am not an advocate of. I'm not a fan of, and I typically do not do. What does that mean? That throughout the morning or whatever day trading window you're in, you're open to longs and shorts in that window. I am not. It leads to over trading mostly. And it then also reminds us that unless we have a high probability sentiment, bullish or bearish, we probably shouldn't be trading that symbol, right? So yeah, Brian, just hit me up in one of the rooms and I'll be happy to walk you through that. Primogenitor asks, I hope you are doing well. I am a little tired, but doing good. I appreciate that. I was wondering if I could go over an order entry in toss. Do I use active trader? No. Gang, I get this question a lot, so I'm going to answer this the best way I know how. Number one, I just bring up an order ticket. I will say, it reminds me for whatever reason that order entry is anymore almost a lost art because everyone's so busy hitting the darn market order button. So sadly, it's a fair question. How the heck do we enter a trade? I will go to trade, and I'll simply, let's say we're looking at I don't know. I'm just going to put in Apple. Okay, so I put in Apple, and let's say I wanted to, for whatever reason, short today, which may not be something I'm opposed to. So I want to short today, and I want to buy the 145 puts. Now I'm going to head on over to trade, and I'm going to make sure I've got Apple up here. Bear with me here. Pull up Apple. Okay. And then I'm going to go to, let's say I want to trade the 19 August, and I'm going to go to the 145 puts. Okay. I'm going to take a look at the open interest because that's hugely important. What's the cost? What's the bid? What's the ask? Notice how I have my thinkorswim set up. Then if I want to play the 145 put, I right click and I click buy and I click single. Then the order ticket comes up. It's a limit order. I put my price in, I send it. That's it. That's it. So in a nutshell, I use limit orders. I'm going to put my price in, however many of contracts. I don't do anything fancy, gang. That's it. I just right click. I'll look at the order chain, the option chain, right click. Lets me do a single, which is going to be a long call or long put. And that's it. That's it. And then, gang, I will say, if you're not sure about how to do that, this is where your broker is actually kind of helpful. Call them up, talk to customer support and say, look, how do I put a limit order? The easiest way, I want to put a limit order where I can see the bid ask. That's a big one. I showed you how I do it. It's pretty basic. It's the basic tabs on TOS. And how do I see the bid ask, open interest and volume as well, which is customizable on any platform worth its salt, and buy at the bid or sell at the ask with a limit order. And that's where the broker could be helpful in terms of guiding you through, the mechanics of getting through their platform. So that's just a quick example on TOS. Okay. Hopefully that's helpful. I don't get fancy active trade. No, not at all. I keep it really, really easy, up to the point where I can put the orders in on my phone too. So I appreciate the question. Hopefully that helps some folks. Can we take a quick look on VZ on the daily? Absolutely. So daily time frame, Verizon, start with structure. We've been neutral since the 20th of May. We are sitting below the 200. Take a look at the 200. It's acted as pretty consistent and doing exactly what I would expect a 200 propulsion to do. Resistance, right? What do you think I'm going to expect here? You guessed it. In a neutral environment, I'm going to look for, survey says, resistance. So with that in mind, what we want to remember then is, if this is neutral, which it is, this is very likely overbought. Well, what else agrees with it? So whatever your oscillator is, go check it out. Now, whatever you use as an oscillator, remember, the whole point of having an oscillator is to know how to understand where support and resistance, where ceilings and floors are in a non-trending market. So it's designed for choppy environments when we're going to see back and forth action. And that's where, if you're interested in, picking your oscillator of choice, I've shared mine with you all for years. It's the slow stochastic 21K 3D with a 20 and 80 being overbought, 20 being oversold. And the reason I slow this down is so that we get the absolute clearest and fewest, much more discerning signals, the best, the strongest, the clearest signals. And the way we increase the probability of that is use an oscillator in a neutral market. I cannot tell you how many times I see traders looking at a slow stochastic in a trend, and then bingo, they just don't know how to use it. And that's okay. Sadly, a lot of people misuse oscillators by applying them in trending markets. And then I remember why. They don't have what a lot of you have, which is a color-coded, simple way of looking at whether the market is trending or not. Is it in chop? Is it neutral? Yellow? Or is it trending? Up, bullish, green, red, bearish? And that's where, whether you have the trade flags, if you're a member here at Simpler Trading, or the multi-trend, if you take one of my classes, or a part of the Sector Secrets Mastery, that really is the not so secret sauce. So overbought is what I'd focus on. Now remember also, Ryan, we're getting into earnings, so keep in mind the proximity. And if you want to know how I trade earnings, I've got it all laid out over at countdowntrader.com. It's the 642 window for earnings. You can Google that. Google 642 window, Countdown Trader, and it should take you right to that link. All right, next up, let's see. Learning so much, went over the class. Live trade. Yeah, Prima, I'll tell you what, Prima Generator, we always, look, we can't guarantee anything. I can't guarantee anything like that. But the whole goal of live trading is obviously to take the tools and run them through their paces. Speaking of that, tomorrow's Friday, we have our next day of live trading, our first day of the elite live trading for the class, which, by the way, you can still join. We're going to start the morning off with a bonus session of about 30 minutes so we can put the HPMR to work trading non-farm payroll. Some of you might have seen the live stream that I did back in June trading non-farm payroll with the HPMRs, and it was a killer trade. So we're going to start the class off about 20 after 8 Eastern. And, let's see if we can't put some more winning trades on. We've so far gone 2 for 2 in live trading, which makes me very, very happy. We're having good, productive days. All right. Next up, do I swing trade currency pairs? I do. Yes. Or are they more suitable to day trading? Both, Nick. You can do both. They're liquid. Now, whether you want to go the futures or Forex route, I would say you probably won't want to go the currency share ETF route, not as liquid. And I would not say as friendly to day trading. Not terrible, but not as good as trading the Forex pair or trading the futures on the currencies, which are still pairs, by the way. So yes, both, absolutely both, especially in as macroeconomic sensitive as environment as we are in right now. I'm with you there. What is my bias for the S&P this morning? All right, so my bias for the S&P this morning is neutral intraday, moderately bullish for the open. We're going to open up to just a vanilla gap, but not a true gap. We're also opening up at the very beginning of a bearish zone on the daily, but I'm going to be moderately bullish on the open, preferring to be long as the 5-minute remains neutral and as long as we remain basically above 38.54 on the daily. So I'll just put that 38.54. And as long as we remain above that, I'll be moderately bullish. Now, that doesn't mean I can't short, because it looks like as we get into the open, take a look at where our HPMRs are. It's pretty quiet. It's pretty darn quiet, isn't it? Unless I get to one of these two zones, right? Unless I get to the upper or lower part of this range, not a whole heck of a lot for me to do. So probably even more important is, where will I act? I might be open to a long or a short. Just depends on which one we get to with confirmation. So, but moderately bullish. All right, next up is MU. Sure. Breaking above the 8 SMA. Well, I don't have a propulsion there, Mark. So I'm not actually paying attention to moving averages that are anything less than the 21 right now, because that's the only place where I have the propulsion confirmed. Is it time to get out of a long put? I am the wrong person to ask, because I would not be in a long put in a downtrend. However, let me put it this way. My target, my thought for a short begins around $59.50. Not that we're going to get there, but that's where I start looking to the short side. So again, please remember, if we have a downtrend dominated by red grab candles, we've got a red trend flag, we've got the red lower row of the multi, I can't buy. I won't buy and I can't buy. And then, you consider the proximity to earnings. Once again, that window is a big no inside 2 weeks for me. So there's a lot of just flat out no's. And not that that's going to help answer your question, Mark, but I've got to be as transparent about what I would and would not do. I hear a lot of analysis out there. And let me just tell you about the way that I analyze a market. If there's something I can't do on a certain chart, I'm going to tell you. If I'm in a position, I'm going to tell you. If I'm going to tell you I'm going to buy something, it's not just analysis of, hey, this is a really good, cool buy. I'm going to take it, right? That's the whole point. And then, we always want to differentiate between people sort of analyzing a market to analyze it versus those who are analyzing it with the intention of getting in. I cannot have the intention of getting in long on this one, Mark, but potentially short, heck yeah. I would be absolutely open to a short setup here as we are in a downtrend moving up into, gang, this is a reversion, right? Call it a retracement, call it a mean reversion. I do not use the 21 exponential as a mean reversion. I use the wave, but the 21 exponential, when we have green propulsion dots, can be an aggro mean reversion. All right, gang, as always, thanks so much for being here for Charts and Coffee. I'm going to head on over into the futures room for the open. My mastery folks heads up for the notes on the day. Futures folks, let's see what kind of setups we can find. We'll review the calendar, and everyone else, thank you as always for being a part of Charts and Coffee. I'll see you tomorrow, same time, same station.